This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June 24th, 2016. Our time is 8:42 Mountain. Radio show runs 6:30 CHED in Edmonton. Sunday afternoon at 3. If you ever miss a radio show, they're archived on Harold's two websites, rarecoloreddiamonds.com, HESradio.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. We go on your portable device. We also have our very own YouTube page, and we're on TuneIn. We're everywhere. You can listen to this radio show 24/7. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week. Talk about diamonds in the second half of the show. It is a beauty. It's a .33 carat princess cut fancy intense pink argyle. See it online, rarecoloreddiamonds.com, featured diamond of the week. It was a very interesting week because it was fairly quiet on the information flow front. We didn't have a ton of information coming out. I've seen this happen before when there's a major event coming up in about a week or so. And what it was, they voted last night in Britain. It was the Brexit vote. Would they stay in the EU? Would they leave the European Union? And it was interesting. We warned our listeners 6 months ago about this vote, and multiple times since. There could be a lot of volatility in the markets depending on what happens. Now, early on in the evening, as I was tracking things, it was interesting. Bloomberg came out and said that there was a poll, YouGov poll, that was going to show that stay in the EU would win 52-48. So at that point, I thought, oh, okay, it looks like nothing is going to change. Then, tracking it, the vote started to come in, and there were cities in England that they had counted on to vote to stay that were voting to leave. So suddenly you had a scenario where people were voting to leave the EU by 52-48, not the other way around. So that's how it ended up. Britain voted to leave the European Union 52% to 48%. Nigel Farage, he is the head of the UKIP party. They were the ones that were advocating leave the European Union. Early on, he had heard through his sources in the financial community that people had voted to stay, and he had actually thrown in the towel. The vote started coming in, and he realized that was wrong. So it was just an amazing night last night. Gold was up $75 at one point, silver up 60 cents. Now, it's going to take 2 years to negotiate a settlement to leave the EU. David Cameron, the Prime Minister of Britain, which is a great irony because he just recently won a majority for the Conservative Party there. He's going to resign, be out of office by October. More than likely, his replacement will be Boris Johnson. And Boris was the mayor of London, a Conservative MP now. He was leading the Leave movement. Looks like he could be the next Prime Minister. But we saw major stock market upheaval. We saw upheaval with the currency market. And there is, without a doubt, the plunge protection teams are in place, and they're trying to maintain some quorum in the financial markets. Markets don't like uncertainty, and that's exactly what we have as we tape on a Friday morning. Harold, what a crazy night it was last night. As you have said to me privately, you can give your take on it, but it'll be interesting to see in the days, weeks, and months ahead how this shakes out.
You bet. But again, if it doesn't affect the U.S. markets, then again, it almost becomes a non-event. But obviously, in this case, it has affected the markets. We're just going to have to see how long. Basically, I believe it's a tremendous overreaction because Britain's going to stay in the EU for another 2 years so they can wind everything down. So you've got markets that are extremely volatile and all over the place. The biggest markets to get affected are the currency markets because the British pound was down almost 10% at the beginning. So the British pound obviously was going to be the market that was going to get hit the worst, and that's exactly what did happen. But as far as my investments go, my private investments with my clients, we're all in American dollars. And we're, so the U.S. dollar has actually made one of the biggest moves today. It's up over 2 cents on the day. We're up at 95.5 cents. So the U.S. dollar is going to benefit from this because the U.S. dollar is the major currency. It's the reserve currency. So everything that trades against the U.S. dollar. And the British pound dropping as much as it did, and if you look at it, almost every currency has dropped. The only currency that is really up right now is the Japanese yen and the U.S. dollar. So the Australian dollar is down 2.5 cents. The Canadian dollar is down 1.5 cents. The euro is down over 2 cents. The British pound is down over 5 cents. The Swiss franc is down a penny 22. So almost all of the currency markets are down, but the U.S. dollar is up substantially. And realizing that most of my clients are in U.S.-based investments, this turned out to be a godsend for us. The market that has reacted, in my opinion, in the wrong way is gold. Now, when the news came out, because of the uncertainty, gold's going to react. There's no doubt. We knew that was going to happen, but I don't think that it's something that's going to last. When the news came out, gold went to a high of 1331.90, so almost 1332, but now it's back down to 1311. So it was up $75. It's up $54 right now, and silver, which was up about 75 cents, is only up about 51 cents. There's no way, in my opinion, that gold is going to stay up if the U.S. dollar is going to continue to rally, and this is what I believe is going to happen. You know, last week the markets were disappointed because the Federal Reserve did not raise interest rates and the U.S. dollar sold off. But now because the British pound and all other currencies are selling off, the U.S. dollar got the same result as it would have gotten if the Federal Reserve had actually raised rates. Now the U.S. dollar is up over 2 cents today. There's no doubt in my mind that the U.S. dollar is going to break par and eventually go up to the numbers that we suggested that they would, which is 108 to 110, because, again, I do believe that the U.S. dollar is going to be the strongest currency, and oil is dropping. Oil is down over 2 cents today, which is affecting the Canadian dollar, which was down at one point over 2 cents today. So, again, a lot of it is an over-exaggeration. Don't forget that people react to market situations, and they initially react, they put their positions on, but then once more information comes out, then the markets start to settle down, and that's exactly what I believe is going to happen, because this is not something that is going to affect the markets on a day-to-day basis. We got 2 years till they leave. Now, we had talked about this a lot before, if you remember when Greece was talking about leaving the European Union, and we talked about the poor people of Greece and how that they would be affected. Because when you're on the euro and you're trading at 108 to 110 on your currency, and then all of a sudden you're back in the British pound, or in the case of the Greece, in their currency, they would be down by 25 to 30%. That means that the people of Greece and now the people of Great Britain have lost about 10% of their net worth on their cash, because that's how much their currency is actually devalued. So that's where the problems are with the currency markets. When these type of situations happen, it's the everyday person that's going to be affected, because they go from being involved in the euro to now going back to their currency, and their currency is now devalued. So now the people of Britain are going to have much less money because their currency is worth that much more. If that makes sense to you, I'm trying to make it sound as simple as possible. The same thing would have happened in Greece and Italy and Spain and Portugal. And now that England has left not England, but Britain has left the European Union, other countries are going to have to follow suit. The weaker countries like Greece and Spain and Italy and Portugal and all that cannot survive, and they're going to go the way of Britain, and that's really what's going to cause the currency markets to wreak havoc. And again, the one currency that I want to be in at this point is the U.S. dollar. There is no doubt about that. The U.S. dollar will strengthen because all other currencies will weaken. Now, I don't even think that the Federal Reserve is going to have to raise interest rates at this point because U.S. dollar is going to do this on their own. I've said to my clients and to the listeners of this radio show for the last couple of years that we need to get out of Canadian-based investments based in Canadian dollars and stock markets and mutual funds, and get into alternative assets that are based in U.S. dollars. And the clients of mine in Canada that have done that have reaped huge rewards because of it. They've converted their Canadian dollars to American, and we're getting paid in American dollars, and as the American dollar goes higher and higher and higher, my investments pay more and more and more, and those are still available to our Canadian clients, and I'm very strongly recommending to you at this point that you should give strong consideration to talking to me about our private investments that are based in U.S. dollars, because they're outperforming everybody in the marketplace at this point. So, again, in my opinion right now, the markets are going to settle, and over the next few days we're going to be able to absorb what has actually happened and what the repercussions are going to be because of Britain leaving the European Union. But in my opinion, the markets are going to settle down. I'm looking at the Commitment of Traders report, and the commercials have added a lot more short positions in gold. That tells me that they do not in any way, shape, or form believe that gold is going to rally much further based on the fact that the U.S. dollar is going up. And if the U.S. dollar is going up, then gold has got to fall. There's no if, ands, or buts about it. All we're seeing right now is that gold is rallying because of the uncertainty of the financial markets. And if you look at the stock markets in the U.S., which again opened down 700 points and are down 391 right now, I'm seeing that at this particular point they're not seeing any major danger in the market right now. What got hurt in the U.S. stock markets are the banks, because the banks deal with each other, and the banks are going to get hurt in some way, shape, or form. But again, what I'm seeing from this is an overreaction in some of the markets, but there is no doubt in my mind that I want to be in the U.S. dollar at this particular point, and that's where we're going to make a ton of money. So if you want to learn about that and how you do that, give me a call, and I'll sit down with you as long as possible and explain to you exactly what the opportunities are, how you make money getting out of Canadian dollars and getting into our private investments that are all paying in U.S. dollars. By the way, all of our Canadian clients today, you made a ton of money today, and I'm extremely excited about that.
1-800-432-1022. 1-800-432-1022. Speak personally and privately with Harold about the different scenarios that you can benefit from that he has. Obviously, you can ask him his opinion on we're going to possibly a world where cashless society, if you can believe it. Also, a world where there are negative interest rates. We talked about that on the last show. Germany 10-year bond, negative interest rate. We'll talk about negative interest rates here shortly. If you're not doing well in your investments, speak personally and privately with Harold. 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. Coming up in the second half of the show, our featured diamond of the week. We'll talk about diamonds. A 0.33 carat princess cut fancy intense pink argyle. See it online, rarecoloreddiamonds.com, featured diamond of the week. Well, it looks like now, and I was reading this morning on Bloomberg, that because of what happened in Britain, the Fed more than likely will not be raising interest rates when they meet next. One of the things we've talked about on our show before is helicopter money. And Ben Bernanke was famously quoted as being helicopter Ben Bernanke. And it's because he threw out the idea of basically throwing money from a helicopter. Now, Janet Yellen, she met with Congress in the United States during the week and was answering questions. And she was asked about helicopter money is an option in extreme situations. And she said if the U.S. economy turns south in a big way, helicopters could be dropping cash over neighborhoods courtesy of the Federal Reserve. That's at least the concept of helicopter money as an unusual idea aimed at reviving economic growth, espoused by famed economist Milton Friedman. Fed Chair Janet Yellen has generally stayed away from endorsing this form of economic stimulus in the past, but on Wednesday said she wouldn't rule out as a possibility, an option in an extreme circumstance. Sort of interesting. It's something that one might legitimately consider, Yellen said. It was her most explicit comment as Fed chair on the subject. Helicopter money was first introduced in 1969 as a concept by Friedman. Here's the idea. The Fed would essentially write a huge check to the U.S. Treasury Office, which would then send tax rebates, translation cash, to millions of Americans. The hope is that American spending of the money, which would hopefully drive economic growth and inflation, the two things that the Fed wants to justify rate hikes. Instead, growth and inflation are anemic right now, and were key factors why Yellen and other Fed officials decided not to raise rates at the central bank's June meeting. More than likely, going forward, because of what's happening in Britain, because of the Brexit vote, uncertainty may handcuff them from raising rates. We'll have to wait and see. But one of the other stories I thought was quite interesting during the week, and it was very prevalent. There was quite a few different articles about negative interest rates. And we touched on it on the last show, the German 10-year bond. Just imagine 10 years, a negative yield. You're warehousing your money, you're paying them for 10 years. And this is an article from Bloomberg. Negative interest rates are a seeping poison for the business models of many of the world's most important financial institutions and could affect the long-term viability, according to new research from analysts at Citi. In a new report from Citi Research, analyst William Buter and Ibrahim Rabahari argue that institutions across the insurance, pension, and banking sector are being threatened by the persistently low and negative rates. And in fact, citing words from Felix Heufeld, the boss of the Federal Financial Supervisory Authority, Germany's equivalent of the UK's Financial Conduct Authority, Citi argues that the seeping poison could mean that many institutions, especially money market funds, comprised of safe, short-term debt, often used by retail investors as a way of making money on a very safe investment, are no longer viable in the long term. You heard right, no longer viable. Most people, what do? They put it into a money market account. As Citi notes, viability in its strong sense means profitability, a rate of return on equity at least equal to the cost of capital. In its weakest sense, viability means solvency. Basically, Citi is warning that the negative rates may stop institutions being able to make money, which in turn would hit their ability to pay out things like pensions and insurance policies. So, Harold, it's interesting to note as well, we have in our free weekly newsletter, Citi coming out another report, Citi FX. Negative interest rates are experimental procedures that are utterly misguided. And we see it across the spectrum of the world. We see it in Germany, Switzerland, a lot of the Scandinavian countries. You're seeing negative interest rates. And it's a situation where somewhere down the line, there will be a day of reckoning, because you're in a scenario, and Bill Gross talked about this, we had this in the newsletter, talked about it on the radio show, that you're going to have a calamitous event because of these negative interest rates. And people, as we warned you about the Brexit and the uncertainty and the volatility in the markets, it's something to be aware of when it comes to negative interest rates as well.
I agree 100%, Randy. Negative interest rates, I just don't see it. I don't see the benefit unless it's just the government trying to get people to spend money as opposed to letting it sit in the bank. And that's the only thing that I see from that, because negative interest rates is a negative thing. Nobody's want to keep their money in the bank, and if the bonds are paying negative, who in the world is going to invest in them? So, again, it just doesn't make any sense. All it does is it reinforces in my mind how badly the banking system, the shape that it's in at this point here. Otherwise, what's the benefit of that whatsoever? I just don't see where the banks are going to make that much of a return by charging people to keep their money in the bank. I think it's going to force people to keep their money elsewhere and just basically keep a very low balance in the bank, just enough to pay their bills every month. and not worry about savings accounts or anything like that. So there's no doubt in my mind that the banks have never recovered from what happened in 2008 and 9. All they've done is kick the can down the road and basically kept on sweeping the debts further and further back. They're eventually going to have to deal with them, and that's, again, one of the reasons today when the markets did what they did with the volatility and the Dow down, 700 points at the opening, it was all the banks that were down. Everything else, nothing much is really going to be affected by that. So, again, negative interest rates, I think it's a scam. I barely keep, aside from my business, where I need to keep money, I don't keep money overnight in the bank. I switch it to T-bills every single night. I don't trust the banks. I would never keep more money in the bank than they have insurance for. So the fact is that we live in a different world now. You've got to be concerned about things that you never were concerned about before. And again, if you're unclear about them and you don't know what to do in this type of financial environment, again, you've got friends here. Randy and I are on your side. We've been doing the show, for over 16 years now. We care about our listeners and our clients. And all I want you to do is to get through these extremely difficult times and keep your money. As I've always said, there's two things that I look at when I'm investing. One is capital preservation. How safe is the investment, and how sure am I that I'm going to keep my money? And then number two, it's am I going to make any money at this? Well, the negative interest rates, keeping your money in bonds or in the bank, you're not going to make any money. If you got your money in the stock market, you're not going to make any money. And that's not just talking. All you have to do is look at your portfolio, and you're going to know that what I'm saying is 100% true. There's nobody that's making money in stocks unless you're an insider. Mutual funds the same way. Retirement savings plans the same way. Nobody is making money, so why in the world would you be sitting in an investment like that? You'd be much better off liquidating those investments and talking to me about how my clients are not only making over 25% a year, but on top of that, they're making it in American dollars. And again, on a day like today, where everybody is reeling because of the stock market and the currencies and everything, we're sitting back laughing because all of our investments are in U.S. dollars, and the U.S. dollar is skyrocketing today, and that's the way that I see the market.
One jurisdiction we did not mention was Japan. Japan has negative interest rates, and we reported to you on past shows there was a run on safes. People went out to their local store to buy a safe so they could keep their money at home. So you can see some of the ramifications of negative interest rates around the world. And if you're trying to save for retirement, we've talked about this on a past show as well. How do you save for retirement when you have negative interest rates? You're just not going to make any money. Speak with Harold. What do you do in the economic and geopolitical times that we're in? Speak with Harold Siegel. He has different investment plans for you, private investment plans. You can give him a call, 1-800-432-1022, 1-800-432-1022. The call is free as well. The call is confidential. Connect with Harold at rarecoloreddiamonds.com. We're going to come back and talk more about investing in diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June 24th, 2016. Our time is 9:06 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. Ever miss a radio show? They're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. We're also on YouTube, have our own YouTube page. Listen to us there, and on TuneIn as well. Connect with Harold at 1-800-432-1022. rarecoloreddiamonds.com is his website. As we tape today's show, we are coming off a crazy, crazy morning. It was a busy day yesterday. As I mentioned off the top of the show, the information flow for the week was very quiet. And we've seen this before. Everyone was waiting for the Brexit vote. And in the UK, they voted to leave. They voted to leave the European Union. It will take them approximately 2 years to negotiate this. David Cameron has stepped down as the Prime Minister and will leave probably by October. One of his possible replacements could be Boris Johnson. He was the mayor of London, now a Conservative MP. He led the Leave vote, and a lot of people are saying that he has the potential to possibly be the new Prime Minister of Britain in the months ahead. We will have to wait and see, but a lot of volatility on the stock markets, currency markets of the world. At one point, gold was up $75, silver up 60 cents. As I was saying to Harold, for those that have an allocation of gold, silver, and diamonds in their portfolio on a day like today, you must be very, very happy as the markets are rocked. Our featured diamond of the week from rarecoloreddiamonds.com is a 0.33 carat princess cut fancy intense pink argyle. See it online, rarecoloreddiamonds.com, featured diamond of the week. And Harold, for those that have diamonds, you know, you sit back and see the volatility in the markets the way we have today, and you must feel very good about the diamond investment that you've made.
Well, again, diamonds are an asset that's off the radar. So basically, diamonds do not get affected in any way, shape, or form by the volatility in the marketplace today. Nothing to do with it. The only thing that did happen, which is beneficial, is that the U.S. dollar is up another 2 cents, and seeing that our diamonds are priced in U.S. dollars was a tremendous event for us. So again, as long as you're in the right currency, and we certainly are, and again, you know, the fact is that there was a lot of analysts out there, and I do take a lot of pride in this for Randy and myself, but the fact is there was a lot of analysts over the last few years that said that because of the financial situation with the banks in the United States and all the debt and everything, that the U.S. dollar was going to plummet. And to get out of the U.S. dollar and into alternative currencies. But we didn't feel that way. We felt that the U.S. dollar was going to be the strongest currency and was going to be able to override a lot of the negative situations that were happening. And look, we're sitting right now at 96 cents basically in the U.S. dollar. I know, you know, many clients have called for an explanation as to how, you know, because it sounds so confusing with currencies, and I know it is. So if you want to know how that works, by all means call me, and I'll explain to you the currency markets and how they actually work. But basically, the U.S. dollar trades against a basket of foreign currencies. It's not just the U.S. dollar against the British pound or the U.S. dollar against the Canadian dollar or the U.S. dollar against, you know, the Japanese yen. They take a basket of currencies, and those currencies on average trade against the U.S. dollar. So the fact is that we would all think that the U.S. dollar would be worth $1. It's not. It's only worth 96 cents right now. Back in 2011, it was only worth 72 cents. That's when gold hit a high of $1,900. So, again, with most of my investments in U.S. dollars and the fact that I urged my Canadian clients to sell their Canadian dollars and buy investments in U.S. dollars has worked out to be a godsend, and I'm extremely proud of that, and I expect it's going to get even better and better and better. So the fact is, if you want to learn about that and understand how that can work in your favor, by all means, give me a call. Getting back to the diamond business, the diamond business is not affected by the stock market going down or the gold market going up. The only thing that's affecting diamonds at this point on the positive way is the fact that the U.S. dollar is stronger. It's days like today when everybody is concerned. The first thing that Americans do when they wake up in the morning is they check the stock market. And when they checked the stock market this morning and found out that it was going to open down 700 points, I can guarantee you there was a lot of people that were very, very nervous. So the fact is, we're not in those investments. They don't affect us in any way, shape, or form. I don't care what the stock markets do. I do follow it. I do understand what's going on, and I do reference it because it's important in the whole grand scheme of things. But on an investment basis, it's not something that I would ever recommend to a client because 90% of the people that trade it lose. So why would I ever recommend something with such a horrible track record that my clients and friends would want to trade in something like that? We try to bring you investments that are much more conservative and are not, in the banking system and not affected by stocks and everything like that. And that's the diamond market. The private investment that I've been talking about is more in the mining sector, and we have a tremendous mining business. But again, the purchase of diamonds as a protection against currency devaluations and all the things that are going on. For example, people in London, I have many clients in London that own diamonds through us, and the fact is that where the British pound has dropped substantially today, their investments in diamonds based in U.S. dollars has increased substantially. So again, it could almost, where it hasn't been totally offset because the British pound has dropped much more, what it actually gives is opportunities in currencies, and that's something that throughout my career of the last 35 years, I've been able to understand and take advantage of. When there's going to be a change in the currency markets, and it's going to be an abrupt change, it's not unusual for me to take a totally different position in the marketplace. And again, a couple of years ago, when we did realize that the U.S. dollar was going to be the strongest currency again, that's when we started to make the moves that we've made. And again, many of my clients in Alberta and Ontario especially have profited tremendously by the fact that we've been able to pick trends in the marketplace. Let's face it, the trend of gold from 250 to 1900 was the biggest bull market of all time. And as far as I know, there was only two people at that point back in 2000 that were calling for gold to do that, and that was myself and John Embry. On top of that, nobody else has been able to call trends to the extent that we have. We called it in oil, we called it in currencies, and we called it in diamonds, and now we're seeing the currency markets do it again. So again, it's extremely important that you reposition your investments into the type of assets where you're not going to lose your money, where capital preservation is paramount. It's the most important thing. That's the first thing that I look at. How apt am I to make money or lose money on this investment? If I feel that the investment is safe and I'm not going to lose my money on it, I'm more willing to go into that investment. If there's a lot of risk, there's a chance I'm going to take a pass on it. And then I look at, if the investment is safe, I'm comfortable, what is the potential for high returns? And again, when you look at the rare diamond market, and especially lately with all the auctions that have come out, we know that the return on diamonds is going to be one of the biggest returns that we're ever going to see over the next few years. So again, Randy, at this particular point, where a lot of people are very upset and concerned about today's market action, I'm not stressed in the least, because again, the only effects that have happened have been positive for my clients, and that's all I care about.
Very true. And you can connect with Harold to learn more about investing in hard assets, diamonds, gold, silver. 1-800-432-1022. RareColorDiamonds.com is the website. Our featured diamond of the week, 0.33 carat, Princess Cut, Fancy Intense, Pink Argyle. This is nature's art, an absolute beauty. We do want to mention that earlier in the week, and this is prior to the Brexit vote, and this happened in London. Picasso and Modigliani, strangely enough, I get my hair cut at a place called Modigliani, but Modigliani lifted Sotheby's sale. Paintings by Picasso and Modigliani gave the auction market a boost on Tuesday in London. Picasso's painting from 1909 sold for 43.3 million British pounds, 63.5 million US dollars, surpassing the target of 30 million pounds, the estimate. And moments later, Modigliani's painting took in 38.5 million pounds, exceeding the target of more than 28 million British pounds. But you can see the art market prior to the Brexit, people moving into hard assets. We've talked about it on the show before. People investing, sure, they're investing in diamonds, they're investing in the art market, they're investing in watches and handbags and cars. It's something that a lot of people with massive amounts of wealth, and even those who are just really interested in preserving their wealth, are looking at in a major way. And that's why we offer something like the Princess Cut Fancy Intense Pink Argyle for investment. It's a diamond, and it's a 0.33 carat. You can check it out at RareColorDiamonds.com, featured diamond of the week. Speak personally and privately with Harold about investing in diamonds, 1-800-432-1022. And if you missed it on past shows, Rio Tinto unveils the lead gems for the 2016 pink tender. Rio Tinto actually revealed 5 highlights from this year's tender of the polished-colored diamonds from its Argyle mine as the company kicked off sales with a preview in Copenhagen. The centerpiece of the 2016 Argyle Pink Diamonds tender is the Argyle Violet, an oval 2.83-carat violet diamond. The mine is in Western Australia, known for its colored diamonds, has only produced 12 carats of polished violet diamonds for the tender in 32 years. The other highlights, which Rio has called hero diamonds, are the Argyle Ultra, a pear-shaped 1.11-carat violet diamond, an Argyle Viva, a pear-shaped 1.21-carat vivid purple-pink diamond, the Argyle Thea, a radiant-cut 2.24-carat vivid purplish-pink diamond, and the Argyle Aria. And this is an oval 1.09-carat fancy red diamond. The full roster of Argyle diamonds on offer, named the Chroma Collection because of its potency of color, comprise 57 pinks, 2 violets, 4 reds, and they all weigh 58.24 carats in total. The tender, which will be showcased at the invitation-only viewings in Hong Kong, New York, and Perth, Australia, with the bids closing October the 12th. The Chroma Collection is one of the finest they have ever had, and they say across all rarity factors with an unprecedented spectrum of color, size, and clarity, according to Alan Davies, who's the CEO of Rio Tinto Diamonds and Minerals. We're already seeing strong global interest from established and emerging markets, according to this CEO, Alan Davies. And Harold, that's one of the things we've talked about for many, many years. Back in 2005, you brought to our attention the naturally fancy colored diamond market with a report. And here we are over 10 years later. Your website is over 10 years old. And those that were smart enough to make that investment 10 years ago in naturally fancy colored diamonds, including the pink diamonds from the Argyle, are going to be doing very well, because we know that coming up in about 2020, the Argyle mine is going to be shutting down, and 90 to 95% of the world's pink diamonds will be going away. And then they may have a few years of tenders with diamonds that they have in the vaults. But beyond that, what you have is a scenario of a secondary market. And Harold, that's when you get into the secondary market, that's when it gets exciting.
You better believe it, Randy. Again, it's going to be a tremendous, tremendous thing. It's similar in extent to what happened today. You're waiting for the event. Everybody's waiting to see whether or not Britain is going to exit, the European Union. It's going to be a similar situation in 3 years from now when they finally announce that the Argyle mine is closing their doors. Then you're going to see what the results are going to be of the mine closing. Now, I'm confident, 100% confident, that the prices of Argyle pinks will skyrocket. Again, it's only common sense to think that if 95% of the pink diamonds in the world are going to be gone, there's not going to produce them, then the remaining 5%, which is a minuscule number, are going to be worth a fortune. And when these diamonds start to come out of the market, people start to sell off their Argyle pinks, you're going to see, I believe, extremely high prices for them. Now, the fact is, and this is extremely important, is that not everybody thinks the way that I do, and not everybody handles their investments the way that I do. But the bottom line is that the majority of Argyle pink diamonds that have been purchased over the years, over the last 10 years, have gone into jewelry, and it was sold primarily by jewelers. People don't know that these are investments. They don't know how great of an investment they are and what's going to happen when the mine closes. They don't follow that. When a husband walks into a store in London on Bond Street and buys his wife, a $1 million pink diamond, he bought her a beautiful gift. He's not looking to say, well, gee, that diamond is going to go up tremendously in value because of this event. The only ones that know about that are my clients. Because, again, I've been in that type of business for 35 years. I know what supply and demand does to an important market, like pink diamonds or blue diamonds. So the fact is that of all the pink diamonds that have been sold over the last 10 years, the diamonds that we've sold for our clients as investments are the ones that are going to come back onto the marketplace. And not everybody is selling their diamonds. I've got clients that will never sell their diamonds. They'll turn them over to their kids and their grandkids and keep them in the family type of thing, because this is an asset and this is an event that will never, ever be duplicated again. There will never be another mine in existence that does what the Argyle mine does. The fact is that there is no mine today that produces 90, 95%, 50% of the colored diamonds of that category in the world. So there's no doubt in my mind that the people that bought Argyle pink diamonds and continue to buy Argyle pink diamonds for investment purposes are going to hit a home run. Depending on what color and what size and how important that diamond is, I believe that all the Argyle pink diamonds will increase in price substantially. Some much more than others, because the fact some are more rare than others. But the bottom line is that this is going to be an event that will be second to nothing in the diamond market. There will never be another event that will compare to the day that the Argyle mine closes. And if you're not involved in the market prior to that, you will miss out one of the greatest opportunities that you have ever had to make money. Just like the people that are sitting back when we started 16 years ago, and we recommended gold. We were the laughing stock. The people that followed us on that journey in gold from 250 to 1900, I've got clients that made multi-millions and millions and millions of dollars. I've got smaller clients that turned 50,000 into 500,000. That's how big that gold market was. But the people that sat back, that didn't do it, that didn't pull the trigger, that didn't have, the conviction that the gold market was going to, they'll remember this for the rest of their life. It's almost like buying a lottery ticket, playing the same numbers every single week. And the 1 week that you don't play those numbers, your numbers come in. That was something that you'll never, ever be able to live down for the rest of your life. Just like not buying gold at 250 and not buying Argyle pink diamonds. All similar situations. So, again, at this particular point, I'm 100% convinced that Argyle pink diamonds will turn out to be the best investment that we have made over the long term. There's no doubt in my mind that that's going to happen. And there's still time for you to get involved because, again, the major price increases are going to come just prior to the mine closing down or after the market closes down, and then it's going to be too late. We have a secondary market that we're building. It's called H. Segal Fine Auctions. And the fact is that as far as our Argyle pinks, none of our clients are selling their Argyles right now because, we've been in it for 6, 7, 8, 10 years now. The fact is we only have 3 years left to go. When this mine closes down, for most of my clients, it will be retirement. The returns that they'll see on that investment will rival any smart investment that they've ever made in their lifetime. And you still have an opportunity to get involved. You can get involved in Argyle pink diamonds, starting in the $30,000 to $50,000 range. They're small diamonds, but they're known as the most concentrated form of wealth on earth, and they deserve that title. Because again, 95% of the diamonds that come out of Argyle mine are under a quarter carat. But just look what's happening at the Argyle tender. What Randy spoke about today is an unprecedented situation. The fact is the diamonds, you have 55 carats of diamonds coming out of the mine, and that represents the mother lode of diamonds coming out of Argyle this year. The mother lode, 55 carats. It's nothing. Those diamonds will sell for record prices. They have for the last 3 to 5 years. They've gone up so much in value, you've never seen anything like what these diamonds have been doing in the last 2 or 3 years. In fact, I've always been able to purchase Argyle tender diamonds. What happens is Argyle picks their best, 50 to 55 diamonds, and they take them on tour to 6 different cities around the world, and as high-end dealers and jewelers get to sit down in a private room, view these diamonds, choose the diamonds that we want to bid on, and submit closed bids. You don't find out for months later whether or not you've won these diamonds. And the fact is, for the last 2 to 3 years, We haven't barely participated because the general public is bidding up the price of these diamonds astronomically. Diamonds that we bid on, we were so far from where these diamonds sold for. Now again, we look at diamonds because we understand the value of them. When the general public gets involved and the buying frenzy happens, then you start to see the prices take on a life of their own, and that's exactly what's going to happen. There's still time for you to get involved in Argyle pink diamonds. You're going to have to convert Canadian dollars to American dollars, but don't forget when we sell these diamonds, we're also selling them in American dollars, which are going to be much higher than any other currency. Please give me a call. This is one of the best investments you will ever make. We've got investments in physical diamonds, in Argyle pinks and blues and flawless yellows and deep flawless whites. And now we're promoting very heavily green and orange diamonds. We believe green and orange diamonds are the next blues and pinks. You definitely want to look into those because there's a tremendous amount of money that could be made over the longer term in those diamonds. But for the short term, we've got the Argyle mine is going to close in 3 years, and then we have 2 private investments that deal in diamonds that are being mined as rough, uncut diamonds, and our clients are doing tremendously well in those. In fact, some clients get paid on those every single month in American dollars. So if that's something that would be of interest to you, give me a call. I'll explain it to you. It's definitely something that would help your financial situation. So again, Randy, with the world in turmoil right now and everybody concerned about what's happening in Britain and the exit, and the markets are so volatile, and stocks are down over 500 points, and currencies are all over the place, our investments are doing just fine today, thank you, and we'll continue to do so.
Connect with Harold, 1-800-432-1022, call free, and anything discussed is 100% confidential. 1-800-432-1022, rarecoloreddiamonds.com, the website, and today's featured diamond. You can find it online at rarecoloreddiamonds.com. Featured diamond of the week, 0.33 carat princess cut, fancy intense pink Argyle. See it online at rarecoloreddiamonds.com. Get our free weekly newsletter from Harold. We'll be happy to send it out to you free of charge via email every week. Read that Rio Tinto story about their Argyle tender. One of the events that's coming up here next week on Wednesday. And next week, we'll be taping our show on Thursday because Canada Day is Friday. The 4th of July, the U.S. holiday, is on Monday. So it's going to be quite a weekend. Canada Day on Friday, and Monday, the U.S. 4th of July. Now, on the 29th of June, the world's largest diamond found in 100 years could fetch $70 million. A now famous 3 billion-year-old diamond the size of a tennis ball found by Canada's Lacura Diamond Company last year could fetch more than $70 million, and that would be $90 million Canadian, when it goes under Sotheby's hammer at the end of the month, June 29. It's a giant 1,109-carat rock known as Lucida Lorona, or Light, and we wait to see next week. And this is a Type 2A diamond, the largest discovered in 100 years, and second in size only to the Cullinan diamond in the British Crown Jewels, will come up for auction on June 29th, which is very exciting. Look forward to that. Also, some other news this week. Graf Diamonds has just made public its latest statement gem, the Graf Vendome, a 105.07 carat D-flawless pear-shaped diamond named after its new store in Paris. The diamond was created from 314 carat rough unearthed at a mine in South Africa, Lesotho. And this is very interesting, following 3D computerized mapping of the rough diamond, Graf's master cutters took many months to laser cut and hand polish the gem. The resulting diamond is the largest cut and polished diamond of its kind in Graf's history, and an additional 12 diamonds were created from the rough, with the largest being a 17.10 carat and 9 having D flawless quality, the highest color and clarity grading for a colorless diamond. Also coming out this week, Petra finding a massive diamond, and this is another white diamond at its Cullinan mine. And in fact, it is it's actually a 121.26 carat white rock from the Cullinan mine in South Africa. No word on what is going to be happening with that diamond. At some point, it will sell. Harold, we have about 10 seconds here. What an outstanding show here today, and people should definitely connect with you and find out more information on hard assets.
Well, thank you very much, Randy. We could definitely help. And again, very proud of the calls that we've made recently. I know our clients are ecstatic over what happened today with the U.S. dollar. I want to wish everybody a wonderful weekend and a very profitable day.
Thank you, Harold. Speak with Harold, 1-800-432-1022, rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.